Welcome back to the program. Steve Uwachukwu is with me here at the table. He's a market analyst, and Ayodeji Ebo, head retail investment at Chapel Hill Denham, is joining us on Zoom. Welcome, gentlemen. Welcome, Steve.
Thanks for having us.
Yes, Ayo, are you there? Okay.
Good morning, and thanks for having me.
Yes, I think let's get started because we have so much to talk about. Russia-Ukraine crisis, the global economic impact. Let me start with you, Steve. If you take a look at what's happening or what has happened so far, what's your own analysis on it, just like in a minute? Then we'll break it down.
Okay, I think if I'm looking at it from the perspective of as an investor in the capital market, because the first thing about capital market is panic. Panic will set in because uncertainties have set in, because you don't know which next country will be moving in or what it will lead to. The fear actually globally is, let this not escalate to a third world war. So that's the fear. The panic is already existing in the market, all markets across the world, because a Ukrainian can invest here in Nigeria, a Russian can invest here in Nigeria, a US, whoever, Britain, all, anywhere in the world you can actually invest. So if it happens in Ukraine, it's also happening here in our capital market. So that panic will set in, that uncertainty, what will happen tomorrow. So this is what actually will affect the decision making of an average investor. So he'll be conscious, the mood will be consciousness, and he will be kind of, what is going to happen next? So like we pray, let it not escalate to that thought. That's why I love the speech of United President.
US President
yes, Joe Biden, when he mentioned that categorically that US will not join into any war with Russia in the Ukrainian soil. So that settles that this will not get to that point. And even the offer to evacuate the Ukrainian president tells you that, yes, they don't have intention of moving in. But like Germans have said, they are going to assist them with some ammunitions and weaponry. I believe that will also settle the issue that the war will remain in Ukraine for now. The war will remain in Ukraine. So it settles the issue of the fears around the war. Where will this lead to? Is it going to take us to third world war, which will result that allies, people will start, countries of interest will start forming their allies around NATO or around the Russia, China, North Korea, and the rest of them. So I like what the development that is not escalating to that point. So within the market, that panic is settling down a bit. If you watch the global market, both in US and China, the indices are now recovering a bit. Some are resisting fall as we speak.
Okay, Ayo, you've heard what Steve has said, and this crisis or this attack is looking more serious. It's like a very serious thing since 1945. I want to ask you the question about how does this pose a threat to world economic recovery? Because the global economy is recovering from a pandemic that was hit in 2020. And this may just be, a snag for us. How do you see it impacting global economic recovery?
Thank you. I feel that this would have a major impact on global growth if it's prolonged, because when you look at the role Russia plays, especially you look at it from the energy prices angle, Russia is like the second largest producer of oil. And you look at the Euro region, they export about 70% of their gas to that region. And in terms of trade partners, they export about 30% of their total transaction to the Euro area. So, and for most of the developed economies, oil or petrol, or what some will call fuel, is not is deregulated. So it means that the populace are paying higher prices, and that will impact on their purchasing power. And the cost of goods of production will also increase. The price of gas has increased significantly. This morning is around $4.53 to be fixed, which is significant. on any that would impact on the expected growth, the projected growth for 2022.
Okay, Ayo, we were not hearing you very well, but I guess perhaps your network is a bit better. Before I come back to you again, Ayodeji, let's talk about more holistically the impact of this on the global economy, because like I said at the beginning of the program, you may think it's happening in Ukraine and you are Nigeria and you are okay. We know we have about 4,000 Nigerian students in Ukraine, at least the last data that I got. I also told, I said it on Friday, that's last Friday's program, that this invasion of Russia in Ukraine can also affect us, even the price of agege bread.
Of course, the grains,
yes,
like I mentioned, food chains, it's going to really affect, in the sense that Russia is the second largest producer of grains.
Yeah, with Ukraine too.
Yeah, with Ukraine, Russia and Ukraine are just brothers. So, in fact, put two of them together, they controls up to 30 or 20% of
about 35%
world
of
supply
of grains.
And grains are used in production of pastas, noodles, and
beer.
rice. Of course, even beer. So definitely most of those item lines that are byproducts of grains, the prices will go, because there is a cut in production first, distribution of the same grains to the world. Because in fact, 70 to 90% of what Saudi Arabia uses as grains are all imported from Ukraine. 90% of the grains they use. So it means that such a country, as we speak now, all the family of noodles and the rest, all the prices are going up because there is a cut of supply of such items in the system. So definitely it's going to affect the food chain. It's also going to affect the price or cost of living around the globe. So definitely the Ukrainian or Russia invasion, because sometimes people don't like calling it war, because it's unfair war. It's not balanced, in the sense that Russia is a super world power.
So
and
Russia is
invading, it's actually invading Ukraine. So it means that both on the supply chain and also some of these very economic welfare taken by leaders from the Western nations like the US, the EU, European Union, and the rest of them against Russia is also going to affect the financial system around the whole globe, because all transactions, as we speak now, a lot of countries have cut off Russia from SWIFT. It means that Russia cannot conduct any businesses with other nations of the world, because most often what you use to settle transactions or pay businesses or settle businesses, you use through the SWIFT. So if you cannot buy item or sell item to Russians, it means that those countries who also have bilateral or balance of payment or balance of trades with Russia definitely will also be cut off. So a lot of financial and economic implications to the rest of the world. So, and like Ayo was trying to lay emphasis on the cost of petroleum, and cost of petroleum or cost of crude actually have risen from around $90 when this war actually started to about over 104, 105 per barrel as we speak. So it means that cost of doing business will still rise, because as the cost of energy is going up, it means that the cost of doing business is going up. Definitely, because if you pay more to buy petrol or pay more to buy any byproduct of crude, it simply means that cost of doing business is rising, because an average producer will input such costs to the production line.
Okay, let's give you a bit of facts. Ayo, I hope you're still there, that we haven't lost you. Are you there, Ayo? Okay. Okay. Yes. Let's take it from where Steve stopped. We've established that Russia and Ukraine are, one of the world's largest producers of grains. In fact, to buttress that, some food companies such as Mondelez, Nestle, which is a big food company, Carlsberg makes beer. Cargill is an American company. These companies are located in Ukraine, and they've announced that they've temporarily shut down. So how do you see this attack or this invasion really really panning out? And how bad can this war get? Steve says it's not a war because it's not,
Okay,
it's not fair. It's not,
okay. Yeah, so I think it's really a very tough situation. So, for instance, you look at for France, they have about 700 of their companies have subsidiaries in Russia, and when you look at the workers that those companies or subsidiaries have, is about 200,000 workers. So it means that it will affect production, and that once it affects production, prices would increase, and it will reduce the purchasing power of the average consumer. So it's really not an interesting period for the world. So I think that in terms of how prolonged this can be, what the world is also trying to do, then the EU and other nations are also trying to do, is to see how those sanctions would tame the Russian economy, how it will impact on the Russian economy, such that they would opt for negotiation, and they will come to the negotiation table. So we believe that this may not escalate for too long, with the coordination and the cooperation of most of the economies or the countries that we're seeing now. While like the German one of the German ministers said that if this persists, they would be willing to cut to isolate Russia. Why they know, they also understand that it will have significant impact on their economies, because for instance, if they take them off SWIFT, it means even for paying for energy, yes, Russia won't be able to receive energy, but there are also a lot of the countries within the Euro area that depend on Russia for gas and also for fuel, would have serious challenge, because there are no major alternative for them for now, because most of the countries were not expecting this. Also, for those economies, they won't have that they sell to Russia, or they are expecting, they have receivables. Once SWIFT is cut off, they won't also be able to receive those funds. And that is how it may be significant and impact on the economy. But from the word that has been used is there's a cost that we need to also pay for peace, based on one of the foreign ministers mentioned that,
yeah.
yes, this will impact, they can't isolate the impact on their economies, but there's also a cost that needs to be paid for peace. And if they don't take this action, it may also escalate beyond this. So by and large, I think on the global space, it's really going to impact. You look at the market, we've seen that volatility since last week, but on Friday we saw the rally across the S&P, and the S&P, the FTSE market, the rally. But when you look at it as at this morning, we saw that the market has also improved. Hello, can you hear me?
Okay. Ayo, the network is actually breaking, but let's take it from the aspect of the sanctions. And what I also mentioned, there's a cost to everything.
Of course, there's a cost.
Yes, the cost of peace. But if you take a look at the economic sanctions, and let me just read a few of it. You and Ayo have already established that US and its allies, the US, the EU, the UK, Canada, have imposed SWIFT ban on some of Russia's banks. Yeah. And to just make you understand what we're talking about, SWIFT connects about 11,000 banks around the world and financial institutions in over 200 countries and territories. So that will definitely impact. Just to give you also some data, Russia has foreign reserves of about $630 billion. So with what has just happened right now, it would really affect that. But if you're taking a look at the economic sanctions, with what we've talked about, EU has also said we don't want to see any Russian aircrafts fly within our airspace. Do you think that these economic sanctions are enough to make Russia retreat? Because even as at this morning, or was it yesterday? I think as at this morning, the Russian Central Bank announced an interest rate hike from 9.5% to 20% to curb
inflation.
Yes,
It's already hitting them.
To curb the fallout. So do you think that these economic sanctions will really make Russia retreat?
Well, there are two sides to it. Just like you said, there are costs of war. Because this is an intentional war. Russia did plan for this war. For over years now, Russia has been building their armories, planning towards this very infection. So it means they plan, they know that these sanctions and economic restriction will definitely come on them. So that's why they're actually ready for anything that comes out. But is it actually touching them? Yes, they've decided to take the impact, the cost of this very war on themselves. But will it deter them if more stringent restrictions and measures are taken? Yes, it will. But like you just said, they are taking out from the SWIFT. It means that literally, even an average small factory business that does business with other euros cannot transact business again. You need to now take cash to Russia before you can do any business. You take the risk of flying through the border and taking cash to them because you cannot wire.
You can't fly.
You cannot fly. So that's the point. So it means that it will limit even those who have private businesses to do with Russians. This is totally cut off. Even Russians who has assets across the globe, it means that a good number of these assets will be forfeited or will face a lot of sanctions. In fact, last week I got information about the France seizing about 2 vessels of Russian vessels. You see, they are increasing these very sanctions and it's going to actually hit Russia hard. What's the intention of this very sanction? Is just to make Russia to deter or to retreat from this very infection they have embarked on. So will it touch the Russians? It's already touching, just like you said, their central bank already is raising their interest rate so that the inflation, in fact, their rebels have flumbled more than 50% since
about
this.
40% Russian ruble.
Thank
That's
you.
the currency. That's
yes,
the name
it
of the
has
currency
flumbled
of Russia.
about, like you said, 40 to 50%.
Yes.
That means it's hitting hard on them. People are rushing. You know, one thing again is that we don't, most of our analysis about Russia is the little they let out to us. Russia is actually hiding most of this information. Even those who are protesting in Russia, they are not trying to the media to actually open up Russia so that the world will see what is going. But information also coming out that people are actually rushing to banks in Russia as we speak. People are queuing to make withdrawal because they know it's going to affect their economy, these sanctions, and there will be a point that some banks will not even have money, you know, to pay the those who have deposits with them. So it's actually affecting them seriously. But will it deter Russia? That's the second leg of it. Will it deter Putin from proceeding to, like I said, this is a planned war. And I believe the nature and the kind of person I see in Putin, he would definitely fight this war to the end. Will this deter him? I don't think all these economic sanctions will deter him, but they are meant to deter him. If there are good voices in Russia protesting and putting pressure on him, he may retreat. By now,
but how long, and I don't know if Ayo is still there, so that we take Ayo. How long can Putin take this war, especially now that it's turned to an economic, there's an economic fallout. It's an economic warfare now. Yeah. Most countries are against Russia for what they're doing. China is not speaking up yet, you know, but for most countries, they're against what Russia is doing right now. So how far can Putin take this? Bearing in mind, I did say earlier, 630 billion naira in foreign reserves. Because of the SWIFT stuff now that has just happened, a few of that will be gone. The Central Bank of Russia would announce, the Central Bank of Russia's governor, I'll be watching out for his announcement later today, I think 1 p.m. Nigerian time, either 1 or 2 p.m. Nigerian time, to tell us how his country would fare. But even the Central Bank has halted foreigners' bid of dumping Russian assets as we speak. Yes. So it's already hitting them. But just like Steve said, the man we know as Putin, will he retreat, or will he say, I don't want to say the word, all of you should go to blazes?
Okay, thanks. I think if we, based on his person, I believe that he will not retreat until things get worse or he sees that there's no other alternative. The country already prepared for this. So when you see their reserves are about $630 billion. So what we expect that what the central banks will also be doing is to see how they will provide palliatives. So there's also already restriction on the sale of foreign securities. So for foreigners cannot sell securities on their exchanges again. And also they are also compelling exporters to sell their hard currency to the CBN. So despite the
Yes, to their
robust
central bank.
external reserves, but they are also trying to see how to reduce the rate at which this would deplete. So I think that if Putin does not uh, reverse his decision, the economy, yes, may be able to survive for a while, but once it's cut off and it's restricted, there will be a lot of internal pressure on him for him to retreat from this war, because it's the populace, Russians, that would suffer significantly from this. Businesses would also suffer significantly from this. And this, even after the war is sorted, it means that a lot of countries that have been depending solely on them will begin to look for alternative, because they would also feel that this may also happen again in the future. So a lot of companies, a lot of countries will begin to look for alternative to a lot of the commodities that they supply them, which would impact on the demand for their commodities even after this war. So it's beyond even ending this war. It's opened up a lot of weaknesses for a lot of countries that don't have alternative in terms of supply of gas, which depend solely on Russia and for some other commodities and transactions. So it's really going to be a very tough one. We know that it would ensure that this it fights this to the end.
Okay, Ayo, just to put in some perspectives, because why we're also discussing this um, is for us to, or for Nigerians to really understand, the depths of this. And let me take it from what Ayo said in terms of other countries seeking for alternatives.
Yes.
If we take a look at, which we said earlier that Russia produces 10.1 million barrels of oil per day. Russia and Ukraine make up 1/3 of the world's wheat exports. You should also know that Russia also, part of the commodities used in producing fertilizer comes also from
crude.
Yes, byproducts, fertilizer. So fertilizer prices may go up, which should also push food prices up. I also mentioned the food companies earlier on. For those of you that like sunflower oil, Ukraine is the largest producer, or is among the largest producer of sunflower oil. Russia is a major source of aluminium. In fact, they did make about $3 billion from nickel, the export of nickel in 2020. Okay. So with all of this, do you think that countries will now be able to sit back, and how soon can countries begin to find alternatives? Nigeria, we have a trade partnership of about $2 billion
with Russia.
Yes,
even the Jokuta steel industry was built by Russia. So I think I even listened to Minister of Steel the other day saying they are trying to invite the original builder to come back, which is Russia, to actually see if they can get to completion of their Jokuta steel industry. So like you said, this is a decision time. Decision in the sense that this is a planned war and there are costs to war. So definitely it's going to affect so many countries. So they have to take the decision. Just like I listened to the Europe, they are looking for alternate gas supply, and they are looking towards Nigeria and looking towards Asia to be a source. They are trying to build a pipeline from some of the Arab nations where they have sufficient gas to Europe, so that they can have sufficient, so they don't depend on Russia. Because like Ayo said, over 35% of gas consumption in Europe is supplied by Russia. Imagine 35% being supplied by Europe. So LNG is also there. So Nigeria indefinitely going to benefit for it. Capacity building is going to happen because expansion of our gas production, because they will also look towards that. I'm very sure Britain will look towards Nigeria for source of supply of gas. Already we are supplying to Europe, so they're going to increase on the production. So LNG is there. They're going to increase on production of expansion of supply of gas to Europe. So definitely countries mostly in Europe will look for alternative. But will that solve the problem of supply chains or logistics? Definitely there is going to be a lot of hiccups during the supply chain, logistics, and the rest. So definitely we're going to feel the impact, just like we're feeling the impact on the crude. The price of crude have moved up to 105, although some Nigerians are happy, while some officials of government are crying, saying we don't want it to get up to this price, because it's going to cause the landing cost of the PMS to a higher price. So definitely it's going to affect us in that manner.
Ayo, let me come to you and ask, how ready do you think the markets are able to withstand these geopolitical tensions? We did talk earlier, you specifically also said that we saw the sell-offs last week. Market seems to be moderating, but we're still seeing a bit of sharp losses here and there. The market is a bit,
panic mode.
Yes, is in a panic mode because they're watching and assessing the situations. But how do you think the markets can withstand this? And just the other question is, what are the lessons? What should we really take from this? What is this attack from Russia on Ukraine really teaching us as Nigerians?
Okay, thanks. I think starting with your first question, we believe that the market will remain very volatile. And because the market was already suffering from the expectation of hike in the interest rates, we saw prices that already declined significantly. So as a result, investors are also seeing opportunities. And that was what happened on Thursday. So when prices got to a level, got to the oversold region, and a lot of investors were buying for long-term purposes. So we believe that, yes, there will be volatility, but for long-term investors, this is also the time for them to be positioning with the expectation that definitely one day this war will be over and economy will also rebound, and all these restrictions would also be lifted. So in times of in period of crisis, there's also investors needs to, it's not a time to panic to sell. It's always a time to identify stocks or investments that have strong fundamentals and you can buy for the long term. But what we've been seeing in recent times is we've also been seeing that switch from equities to fixed income instruments. So you see the yields on the US bonds declined on Friday, and we also expect that buying interest may also persist or extend into today. But in terms of now moving to the lessons that we should take from this, I believe that what Nigeria is, when we look at what are those products, those commodities that we depend almost solely on on other countries before we can survive. So if we identify, we mentioned the impact that the increase in price of wheat would have on Nigerians. So this is the time for us to see how can we begin to reduce our dependence on the importation of wheat, and we look for what can we use as alternative to serve this purpose, so that it will reduce our dependence on this, and any major global crisis that impacts on commodity prices will not impact significantly on us. And again, when we look at Steve spoke about in terms of the oil prices, it's really all concerning that we are not also benefiting from this higher oil prices because of lower production. You look at our average production still around 1.2 million barrels per day, and you look at the budget, our oil revenue has been projected to about 3.3 billion 3.3 trillion, I beg your pardon, in the 2022 budget. and the production is being pegged about 1.86 trillion at $62 per barrel. But when you look at what we are producing, you can still see like about 400,000 barrels gap, which means that in terms of revenue that we should be getting, in terms of effects that we should be benefiting, we are not. But when you look at the other side, in terms of subsidies, the president is about presenting a supplementary budget for oil subsidy, which is going to about 3 trillion. But with the if this is sustained for long, it means that oil subsidy or fuel subsidy rather can increase to as much as 5 trillion naira, which is significantly higher from the oil expected projected oil revenue. So there's a lot of lessons that we need to learn from this. We need to begin to produce.
We need to be self-sufficient.
Oil. That doesn't mean that it will bring down the cost of crude, but it would also help in terms of our demand for FX. So it reduces the demand for FX and creates a bit of stability for our FX.
All right. Thank you very much, Ayo. I think we'll leave it at that. We'll continue to monitor the situation. Thank you very much, Steve, for coming today. I've been speaking with Steve Uwachukwu, who is a market analyst, and Ayodeji Ebo, who is the head retail investment at Chapel Hill Denham. We have been looking at the Russian-Ukraine crisis, the global economic impact. Don't forget to join us again tomorrow, same time on this station. I am Nancy Naji. Be the best you can be and be the change that you want to see. We'll continue to monitor the situation. Like I said, it's a developing story. I'll see you all tomorrow. Bye now.